sounds cool. She zoots. Check it out. All right.
Stay a step ahead with the MTS Pulse from HTC. You pay just for the usage, we pay for the phone.
This is the Times Television Network, and you're watching ET Now.
Hello and welcome to Currency Camp in Ahmedabad. This time the camp is organized by Alpari Financial Services and ET Now. Partner exchange is MCX SX. Well, we have done other cities and we have had huge response from you, good questions being asked as well. And this time Ahmedabad is where our city is. Ahmedabad is a major hub when it comes to investment in markets, whether it's equities, currencies and commodities. And that's the reason we have chosen this place after Delhi and Mumbai. Ahmedabad is an important market, whether it's equities, commodities or currencies. The major number of NRIs come from this place and this is a huge hub of investment and industries as well. First of all, want to invite on stage Mr. Pramit Brahmbhatt. He is CEO, Alpari Financial Services. Also calling on stage, Moses Harding. He is Executive Vice President and Head Global Markets Group from IndusInd Bank. Mr. Sanjeet Prasad. He is Director, MCX Stock Exchange. And we also have Mr. R.K. Das. He is Head Treasury Services from Adani Group. Pramit, starting with you first, do you think it would really make a lot of difference when the timings are aligned to the international markets and you would see volumes and risk management get better?
Well, if we see, these are two different markets. Across the world, also equity market works in a specific time zone for 5 or 6 hours. But when you look at the currency market across the globe, it's almost open, it's open for 24 hours. So it's a two different market altogether. So we cannot compare that because the nature and the operations are totally different. Participations are totally different. So that way, in currency market specifically, yes, the increasing timing will definitely help.
Sanjeet, what is your viewpoint? How do you think it would support the markets?
Yeah, Manisha, I'll break this question, my answer in two parts. We are talking about USD INR. It's a pair. Now, this pair movement, price fluctuation in this pair is because of impact on INR and impact on USD. Now, impact on INR is captured during daytime, 10 to 5. But are we able to capture the impact on USD when the American market opens? The answer is no. Second part, this market, futures market, is typically for SMEs and small time traders or small time exporters and importers. Now, I am a bullion exporter or importer sitting at Javeri Bazaar or Manik Chowk. I book a consignment when the American market opens, that is after 6 p.m. IST. Now, how do I hedge my currency risk? Either I have to wait overnight, next day morning I have to come to the bank and hedge my risk, or I just sit tight and wait for the God to bless me.
Absolutely. Mr. Harding, this is to you really. You know, when we talk about currencies and when we talk about interest rates, how do you approach that market? Is it like for a trader because the kind of volatility that we are seeing in the international markets and rupee, or would you look at it from a longer time point of view? I'm sure corporates, when they trade or when they are into their core competence in their business, do take a longer viewpoint on that currency.
Actually, the interest rate direction sets up either 3 to 12 month view on the currency. So assuming that you are going to see a rate hike by RBI, then automatically rupee sets up an appreciating trend. And market always acts ahead of the event. Buy the rumor, sell the fact is the market syndrome. So interest rate is a very crucial factor to set up the exchange rate tone. Number two, that brings the capital flows. But on the capital flows, only interest differential is not the only criteria. You need the growth factor and the opportunity and the return that the domestic market provides. So the interest rate scenario, initial knee-jerk is there is going to be a hit on the growth. So there will be a dent on the offshore flows that will more or less neutralize the scenario in the near term, but sets up a medium to long-term positive undertone.
Mr. Das, as an industry person, how do you approach a currency market? I mean, the kind of volatile moves that you have seen, do you hedge your risk in currencies, or do you take a longer point with a huge range?
We don't take a short-term view of the market actually. If the position is short-term, is that okay? So what happened on the asset liability sheet, we say that actually how much position are short-term and how much are in the long-term. So in terms of the long-term perspective, so we take a long-term view and manage volatility rather than taking on that. Because short-term the market is very volatile, so we may not be through that actually.
Pramit, how do you approach this market? You know, while there are people who hedge their risks, I'm sure industries do that, and then there are traders who trade it on a daily basis, buy or sell and make money, and then of course there are HNIs and other people, SMEs, exporters, importers who trade into this market, and then there are these hi-fi jargon in the market, people straddle, they do butterfly trades and they do complex trades. What kind of participation do you see in the markets?
Well, over 2.5 years, what we have seen, there is a change in the approach. Initially, it was difficult for any broker to explain what this product is to the, especially to retail investors or a HNI or a day trader, because they are very much bogged down into the equity and later on in the commodity. When it comes to the corporates as a large corporates, they, as Mr. Das said, they are already developed and they have their own risk management system. But when it comes to the SMEs, sometimes they have a tendency to understand they have a natural hedge and they do not want to hedge because they consider that any losses into the currency exposure as a they don't consider as a business loss, but they say they lost out on the currency trading, but they don't use that as a risk management tool. So that tendency has started changing, and also for the investors as well as the traders, they also accepted the fact that there is an opportunity in this market. As Mr. Prasad has explained, the costing factor for the day trader, that is very much important, because while they are spending 3,000 rupees on a equity segment, they are spending only 200 rupees as a cost. So for them, the profitability increased that way as well. So the whole approach has started changing.
Brought to you by Alpari Financial Services India Private Limited. Partner Exchange, MCX Stock Exchange, India's new stock exchange.
Hey, that's what I like.
Legs are happy in asylum, even in the last row. Ask me, I'm 6'3". Look here, happy legs. Wake up, happy legs. Happy only in asylum.
And a wicket needed.
Yusuf bhai, idhar aao, idhar. Yusuf, आगे आओ ना यार, आगे आगे. इधर आओ. ऑफसाइड पे सब मारेगा ना, रसगुल्ला जैसा आएगा. Yusuf, अरे हिलो तो सही है.
जब पार्टनर ही सही ना हो तो 100% परफॉर्मेंस कैसे देगा? इसी तरह 100% हाई डेफिनेशन एक्सपीरियंस के लिए आपके HD TV को चाहिए सही पार्टनर. Dish True HD, India's first with 35 HD services. Are you HD dear?
Showcasing the most cutting-edge couture trends and demonstrating innovative apparel process solutions. AEPC and IGFA present 47th India International Garment Fair, a specialized business fair exhibiting contemporary fashions in the apparel industry. From the 12th to the 14th of July at the Pragati Maidan, New Delhi.
Mr. Harding, let me come to a bigger picture now. The international markets have been moving a lot. A lot of people have started trading in currencies, as our experts tell us. What news, what factors would you watch in? Because IIP data moves the market. a US data moves the market, a speech from Euro official moves the market. How do you, factor in all this information?
In my view, I look at I'll superimpose the technical on the fundamental. If there is going to be a short, medium term, long term approach on the market, and then you bring in the technical factor, then it sets up a trading range, like 140 to 145 on the euro dollar, and 44.50 to 45.20. It sets up a good trading range, taking into account all the fundamentals factors for the next 6 to 12 months. So that sets up a very good opportunity, and that's when it moves into the either end of the range, that's a very good risk-reward trade. So all fundamental factors are very important. Superimpose that technical factor and take a fairly longer-term view in order to avoid intraday trade. Intraday trades is a zero-sum game, and there the human psychology is when you see a 5 to 10 paisa profit, you take it. When it goes to 20 paisa loss, you run it. So intraday play is a zero-sum game. You have to take a reasonably long-term view on the currency. As I said, 3 to 5 opportunities in a month is good enough to make your money for the month.
I think Sanjeet is the best person to ask. Do people trade more on a daily basis, or do you see open interest also rising?
Growth of open interest, it has been very healthy. Now, open interest is growing because people are taking a view on the market. Day traders typically cut off their position on an EOD basis, more out of the market. So we are seeing a participation from different sections of people. We have bankers who are participating. We have got more than 30 banks participating. The treasury participating day in, day out, taking different views on the market. We have big corporates, SMEs also participating. And of course, we have day traders also participating. That gives a lot of liquidity in the system.
Pramit, in equity markets, people come and say, take my money, make money for me. That's happened in commodities as well. Prices move so much. People actually come to broking houses and ask them to make money. Has that happened in currencies with you yet?
Well, I would like to highlight certain things that there are a few news events happening in Ahmedabad and Gujarat recently regarding certain things where people are interested in very high return, and there are fraud people.
Gujarat's DNA is what Mr. Das said, to make money.
Yes. So yes, but definitely it has to up to a broker that how do they control and how do they advise client in terms of taking the money and managing the money for them. It has to be two different business model here. I would like to also add on to the comment of day trader, and day trader or intraday speculators are a very important part of any market, because India, if you see we are always having a net business deficit in terms of export-import. So if all of our importers are having a one-side view, there won't be any takers in terms of the market to buy that. So intraday traders are providing a good liquidity to this market. Also, the tendency of the intraday trader coming into the currency market has changed from intraday to 2 to 3 days, because as we have seen that markets are opening with gap, and intraday actual movements are 5 paisa, 6 paisa to 10 paisa, which is not making enough money to them. So that tendency also started changing, where intraday traders are keeping position for a few days. So that is also a unique feature of this market.
So with that, we'll thank our panel of experts. The currency markets have seen steady, strong growth in the recent past years. From 2004 to current year, we have seen the volumes double up, and much of those volumes do come in from Ahmedabad. First of all, to make a presentation, I invite Pramit Brahmbhatt. He is CEO, Alpari Financial Services.
As we have seen in the past, the currency market since 2001, it has grown almost 5 times till now. And especially the emerging markets like India and China, with their support, Asian market is also growing. Especially the emerging markets are growing almost 3 to 4% as a share in the global market, and which is expected to contribute around 5 to 8% in coming years. So it means almost double of the growth of emerging markets. So that is one of the good contribution towards the global currency market. We have seen since 1991, after India adopted the privatization and liberalization policy, the fund flows of the foreign investors coming in India, and India has become a global hub for the investors. Not only from the Indian investors, also for the foreign institutions have started investing in India. Also allowing private players and the globalizing global players to participate in the restricted area. There were few sectors which were restricted before 1991. If you look at the insurance sector or the telecom sector, aviation sector now, there are planning that they will allow the foreign players as well. So these are the sectors where foreign investment has come, and that is definitely comes with the foreign flows of the fund. Now to manage these funds, definitely that has to be some